Hey guys, just want to talk through some aspects of this newsletter on paradigm shifts in the market and what does that even mean when we think about how to invest. So, I think that saying that things are different this time in investing is generally a really bad idea. I don't think it's usually accurate, and I think it can get you into a ton of trouble. However, paradigm shifts do happen and they may not be forever lasting. Some of them are, but oftentimes they force a fundamental rethinking on investors' part about the way the world operates. So, the subject of this particular piece is how has the change in interest rates, the destabilization of interest rates and the destabilization of inflation forced a paradigm shift in real estate? Because for a decade, the world was very orderly. Things marched in quick progression and it was straightforward. After the rise in inflation and the spike in interest rates, we're dealing with a totally different situation. And it is forcing a fundamental rethink on investors' parts about how to put capital to work. Like, how do you evaluate risk? How do you look at deals? I go through a couple historical comparisons of other big paradigm shifts, but we're living in a time right now of some substantial shifts in thinking. I'll give you two. COVID-19 forced remote work to become a thing. I mean, this whole world of Zoom and Teams, it didn't exist before. All of a sudden, it's a thing. Now it's a huge thing. And the formerly stable and secure and institutionally favored asset class of office is out. Like, the way we look at office and risk and investing in office is light years different from the way it was in 2019. I mean, I remember being in San Francisco in 2019. It was hot. Like, it was a good time to be an office guy. Not great in 2021, 2022, and nothing's changing. I think it is a fundamental shift in how we perceive the risk of that asset class, that it was one way for 100 plus years since the Industrial Revolution. People started coming into offices, working. Like, that era is gone. Another one that we're in right now, and we don't know the impact yet, is artificial intelligence. It is going to force a change in how we think about things. There are entire industries that may not exist in 10 years as a result of AI. I mean, I think accounting is at serious risk of being completely removed at some point. Legal, I think there will always be value in having a human approach to conversation and someone to guide you, right? So the advisory role of lawyers will probably remain. But do you really, like, with the pace of evolution on ChatGPT and text-based systems, do you really need someone to prep long-form legal documents for you anymore? Do you need to pay someone a ton? I mean, there's significant changes are coming. We are in a period where things are changing, and a lot of things look like they're changing and they're not. I think AI is a pretty significant one. I don't think we're ever going back on office. I think the era is different. The interest rate thing that I highlight in this piece is really like, it's a short-term thing. We're going to get back to a stable regime for this stuff, but we're not there right now. And the way that people invested for the last decade, it is a completely different world right now. And that's the point of this piece is to look at this and say, what kind of huge shifts are happening in investor sentiment, how investors are thinking about investing, how they're thinking about risk, how they're thinking about underwriting, stability, lack of stability. I mean, these things are huge, like really important. And so I wanted to dive into that in this report.